Hello and welcome to my special edition Valuation Comparison Dotcom King Cisco to AI King Nvidia, a bull and bear case study broken down into 3 steps. Step 1, the business. Step 2, peak PE of Cisco and bubble implications. Step 3, reversion to normal valuation. So we'll start with step 1, the business. What is Cisco, Robschild? What do they make? Cisco was the darling of Wall Street in the 90s up until the year 2000. They were known for making internet hardware. The possibilities were clearly endless in the internet, and Cisco, the company that made the hardware to make this possible, was making money hand over fist, more earnings every year. Not too different from today's darling of the stock market, largest company out there right now, Nvidia. What do they make? AI and cloud computing hardware. Notice the similarity here of Cisco making internet hardware and Nvidia making AI cloud computing hardware. From the mid-90s, Cisco systems rose in price several thousands of percent, peaking at a record-breaking valuation of around $500 billion. And this is largely because their stocks, the earnings per share, just kept going up. In 1996, 15 cents a share, reaching all the way up to 36 cents a share in the year 2000. And by the year 2000, the price reflected, assuming that the earnings growth was going to continue to go higher to no end in sight. And the peak price per dollar that the company earned got all the way up to $222. So you're paying $222 for $1 of return. That was reflected in the PE ratio in the year 2000 of a peak stock price of $80 divided by its yearly earnings of 36 cents, making the PE ratio 222. Now, to compare that side by side to Nvidia, the current price of Nvidia, sorry, I had to add that in there, is $207, and this represents a PE ratio of 59. Now, in order for us to get to the same amount of growth priced into the company as we saw in Cisco Systems back in 2000, we would actually need to see the PE ratio multiplied by about 4, which gets us a PE ratio of 236, which, is roughly times 4 at the current price, which, would make Nvidia's price $800 basically. So that's the peak bubble potential scenario, but this also, by the way, assumes that we are currently at a peak of earnings in Nvidia, and we don't know if we're at a peak or not. The earnings per share represented in this middle line here has been rising at a meteoric rate, with the most recent data at $3.51 per share. So assuming that the earnings actually just stays the same, if we were to get to the same growth-like valuation of Cisco, again, we would need to see our price rise 4 times what it is today to about $800. There it is. All right, so that's a bull case. And again, if earnings continues higher than this 800, we could actually go higher. If earnings were to double and then we also got the same, price ratio expansion to Cisco Systems, we're looking at $1,600 a share at Nvidia. So we do need to really keep a close eye on what's going on specifically with the earnings of Nvidia. But assuming the bear case that we are maybe at a peak in earnings per share, it brings us to step 3, reversion to a normal valuation. Cisco Systems, famously from its peak in 2000, dropped about 88%, almost 90% here from peak to trough, bottoming around $8 a share. This is because, as reflected in their 2001 earnings 10K report, in 2001, they were not only not making money, they lost 14 cents a share for that year. But what we're going to do is take the peachy number, the best earnings that they had ever had that year, to find what kind of valuation it would match up with when it fell. So we're going to use year 2000 EPS being 36 cents a share, and that being at a valuation instead of $80, it bottomed around $8, and that equals a PE ratio of about 22. Now take the price of Nvidia based on current 12-month past earnings at a PE ratio of 22, and we actually get a price of $77.56, which would represent, from today's price of Nvidia, a drop of about 63%. And as a bonus, I'm going to add this little red line down here. What's that, Robschild? That's a gap fill from 2023, which I looked on the daily chart of Cisco. There was no gap fill. Kind of wondering if it can even go lower. Many people today recognize an AI bubble, and it also needs to be recognized how much bigger the bubble can get before it deflates. As long as Nvidia's earnings keep expanding, the price of Nvidia can keep going up higher and higher. But if it shows any kind of weakness, or a quarter where all of a sudden there's negative earnings, the ride down might get a lot of people off guard. And that's all for the special edition Valuation Comparison Dotcom King Cisco to AI King Nvidia. And just want to share one more shot of all of that right here. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.